Well, the South African Reserve Bank's Monetary Policy Committee has hiked interest rates by 50 basis points to 7.75%. Economists were expecting an increase of 25 basis points. 3 members of the Monetary Policy Committee voted in favor of the 50 basis point hike, while 2 wanted a 25 basis point increase. The latest hike brings the prime lending rate to 11.25%, the highest level since 2009. Well, the General Industries Workers Union of South Africa says it's concerned about the interest rate hikes and the economic theory behind the Monetary Policy Committee's decision. Well, GIWUSA President Mametlwe Sebei joins us now to discuss this further. Ntokozo Sebei, thank you so much for your time and thank you for joining us this morning. Very quickly, your initial reactions to this 50 basis points hike.
It is that this is, going to be a disaster for the working class and middle class people in this country who are already struggling with the cost of living, crisis that we've been facing, people who have been struggling with, a mounting debt. We know that many of them are already having a debt-to-income ratio. If you take the category of those that are earning between 10,000 and 20,000, they have a debt-to-income ratio of 125 to 161% of their income. And these are people who are now going to be paying more on their home loans, on their vehicles, and on their credit facilities. And many of them actually are defaulting. If you look at the report from the credit stress report of the last quarter in 2022, it shows that those earning 15,000 have defaulted. And the increase in their defaulting on vehicles is about 30%. There's also been increased on default on home loans by 18% and credit facilities by 17%. But also small businesses are closing. The report released by ABSA shows a correlation between the beginning of what we call a policy normalization, which is this round of interest rate hikes, and of course increases and astronomical increases in small business liquidations since November 2021.
Right. Now, you say that this recent hike is essentially spelling a disaster for the working class in South Africa. Now, to counter that, in response to that question, Reserve Bank Governor Lesetja Kganyago said that it's important for the Monetary Policy Committee to, respond to the inflationary sort of rates that we've been seeing, the high inflation that we've been seeing. He mentions how, inflation is essentially eating away at the income of the very same working class that you are referring to, that many of them, can't afford to put food on the table as a result of this inflation. And as a Monetary Policy Committee, they're merely responding to that. What's your response to that? I mean, what other alternatives are you willing to put on the table to say that this is how we can best counter the inflation problem that we currently have?
Firstly, there is something to be said about that logic. But lasted here. One is that more than anybody else, as workers' movement, we are concerned about inflation because this, as I've said, for us, it means another disaster of the cost of living crisis. It is our members, their families, their communities that can afford bread, that can afford, the cost of electricity, that can afford, basic necessities for survival. But who has been responsible for this, right? And you just have to look at 2 reports that have been tabled by, Competition Commission. One is the report, firstly, on the concentration of the economy. And it says that about 178 sectors of the economy, including agribusiness, food industry, mining, and others, are concentrated, centralized, meaning they are dominated by monopolies that dictate what we produce, how we produce it, who get to be employed, who get to eat, and at what price. And this is a problem. But also, in the report that they released on Tuesday, what they call essential food price index or report, right? And it says that the price of of oil, the price of white and brown bread, but also maize bread, between January and December 2022, those prices have been unreasonably, opportunistically, and unjustifiably increased. That is Competition Commission, the state regulatory sector. Authority, not ourselves. But what are we saying? What we are saying is that, you see, the use of interest rate to combat inflation assumes that the problem is that working class people are spending more. That is far from the truth. When you use inflation, which is raise the cost of borrowing to dampen demand, you are trying to kill, you are trying to suppress the demand in order, therefore, to pull the prices down. That is not a problem that we have in this country. Besides what I've said, there is also a problem of a collapse in the productive forces of society. That is, when there is less production going on. And what has been the cause of that? The cause of that has been COVID lockdowns on a global scale, but also in this country, due to now the load sheddings, the devastation in the manufacturing capacity that also precede load sheddings, but also the war in Ukraine, that has also again aggravated the problem of ongoing supply chains,
right.
Gems and so on. So those are the factors, and it is about us, one, regulating the prices to ensure that monopolies don't opportunistically abuse that. Two is about raising the productive capacity by reindustrializing the economy, but also making sure that, we address the problems of unemployment as well as a cheap access to credit that would also make sure that small business people can borrow, but also be able to supply goods affordably.
Well, Mametlwe, you've just listed for us quite an extensive list of factors that you think the central bank ought to be considering when it's making these monetary policy decisions. But the fact of the matter is, we know that the central bank has a laser focus on inflation. It has repeatedly said that that is the central bank's mandate. Are you purporting that now is the time to really take seriously the idea of having debate, having conversation around expanding the bank's mandate so that it is considering things like the various crises that South Africa's economy has had to deal with, more recently the COVID-19 lockdown, more recently the load shedding and energy crisis? These are real factors that, as you've mentioned, have a real bearing on the country's inflation, but do not form part of the bank's focus.
Yes, but the point also is that I think if you listen to Mr. Khanyago himself, right, these interest rate hikes are not really only about combating inflation, and they fail dismally at that. If you look at what has happened in the past year or two since this so-called post-normalization has begun, right, it is about combating an unfavorable flow of capital. And what is that? It is because, you see, South African Reserve Bank is really at the mercy of forex traders that are always trading on currencies. So when South African rand, the interests are low, they basically borrow South African rand and sell it on a high interest rate, currencies, if you like, and that increases the supply of rand and therefore devaluing its value, and consequently the value of rand collapses. Right? That is also the reason that that's what they are trying to do. By raising interest rates, they want to maintain a healthy, if you like, an attractive differential between the value of rand as well as or interest rates here and those of the U.S. in particular. And that's the reason that they've been telling the U.S. Fed in this respect.
All right.
And we are saying this is because of the capital deregulation of the ANC. It is because of the neoliberal, program of the ANC that has deregulated the financial markets and ensure that you can have hot money moving in and out of the economy. So we are saying that this interest rate is about SRB making or doing the bidding of the forex traders, the swindlers and the speculators.
Okay.
Who we are saying, who even the reports are saying, their speculation in currencies account for 95% of the forex market.
Okay.
And that is a problem.
All right, Mametlwe, unfortunately, we have run out of time. We are going to have to leave that conversation there for now, but I appreciate you coming onto the platform and sharing your insights with us. That's GIWUSA President Mametlwe Sebei.